Hi, this is Stephen here from Share Navigator, and today we just want to share with you how we've managed a trade that was losing on us on Yum Brands. So we need to go back all the way back here to when we actually placed the trade. We placed a short Strangle. It was an earnings play, and we used the $70 stroke $87 strike prices. So basically the trade we placed was we wanted the share price of Yum to trade in between $70 and $87. After earnings, the share price jumped and went to a high that day of about $85, so that was fine. We weren't worried at that stage. But then the share price gently rose up to $87. So we bought the stock at $87 to cover our short call position. Then what we had was a classic reversal of the share price, and we felt at that stage the share price may pull back even lower. So we bought back our shares at a small loss. And then, of course, we had big news on this day, which was that a billionaire activist investor had invested over $1 billion into the company. And that drove the share price into the mid-90s. So what we've managed to do is take a trade that could have been losing about $5 per share into a loser of just 89 cents per share. And I want to share with you how we went and did that. So I'll bring you to an Excel spreadsheet now. So here you are looking at 10 trades that we've placed. The first two is the original trade. We sold a put option expiring on May the 15th at the $70 strike, and we also sold the calls at the $87 strike, and we received in 78 cents in premium. Then, as I said, trade number 4, that's when we bought the stock, and we closed it down shortly afterwards when we thought the share price was reversing. Trade 3 was basically selling the $85 puts because we felt at that stage, the share price was trading in the mid-90s, so the $70 puts weren't going to be exercised. We closed them down, then opened up the $85 puts. We also then bought back that put and we sold the $90 puts later on, and that's as the share price drove into the mid-90s at this stage. And then the 7, 8 and 9 is where we're buying back a lot of those puts and calls at various prices. And our last trade, which was trade 10, which is when we sold the $87.50 put for June the 19th, and we took in 72 cents in premium. So all in all, when we take all of this into consideration, we've lost 89 cents per share. We did 5 contracts, so our total loss in this position is $445. Now, nobody wants to see a loss in their portfolio. Are we happy about this? Absolutely not. We'd rather not see it. But these things are going to happen. This trade originally had a probability of 82%, but a combination of news events caused the trade to go wrong. So it's how we manage it thereafter. And the real lesson for you in this is, if you did nothing on this particular trade, you'd be in a losing position at the moment of about $5 per share. The way we've managed it, we've managed to turn that into just a losing position of 89 cents per share. Taking that into the total context of our portfolio, we have made month to date in June, it's now the 19th of June, including this particular loss, $1,000 profit. So when you take everything into consideration, it's all about managing your winners and managing your losers and learning how to deal with these type of situations. So there's great learning in this for you guys. You should track the trades, track the progress in the forum, and we hope you learned a lot. Okay, this is Stephen from Share Navigator. Thanks and bye for now.